It's the ignorance of what it costs to close a limited company that gets directors like you into lots of trouble, not necessarily the insolvency itself. I get messages and calls all the time, Chris, what does it cost to liquidate the business? And the truth is, closing a limited company can cost you nothing, or it can cost you everything. Tens, maybe hundreds of thousands of pounds. And it depends on how you close it, what process that you use, and if there's anything nasty down the line that's going to bite you on the backside. Now, if you don't understand all the costs up front, there's a good chance you're going to get hit with a nasty surprise down the line. I'm going to tell you a typical story that I get. I'll get an inquiry, we'll get into the detail, and I'll say, listen, yeah, it's going to cost you £5,000 to close a company as a liquidation fee, but it's not the only cost because you've got a large director's loan account and you're going to have to do something about that. So it's going to be £5,000 to close a company, and then you might be spending £10,000-20,000 settling your director's loan account. And the director or the inquirer will say, well, I've been offered, someone said they're going to do it for £2,500, so you're too expensive. I'm going to move off and go with a £2,500 liquidation. And I don't hear anything off them for about 2 months. And then I get the email, Chris, I'm now being pursued for X amount of thousands of pounds. And I just don't respond because I've given them the information and they've just wanted to hear what they've not liked what I've told them, even though it was the truth. So please don't be that person who gets some good advice, ignores it completely, and then comes back with a problem that they really can't fix. Now, there are 4 ways to close a company. I'm going to tell you what each one of them costs. So the first one I'm going to go through is striking a company off, voluntary dissolution. Okay. Now, this cost £33. Okay. It is the cheapest option, but it's only a good option if it's used correctly. Okay. What you do if your company has not been trading for 3 months, it's deregistered from VAT, it has no debt, okay, or it's paid all its debt off, you file a DSO1 form at Companies House and you close the company down. It's struck off, okay? But here's the catch. Dissolution is only legal if the company has no debts, it's got no HMRC arrears, it has no outstanding bounce back loans, and it has no creditors that are likely to object to the strike off, right? If you try and strike off a company with debts to suppliers, to HMRC, or with a bounce back loan, the creditors will object to your strike off, okay? Remember, if you try and attempt to dissolve a company with a bounce back loan, the bank will stop it, okay? But if you have no debts, or let's say you owe a little bit of money to HMRC and you've got no way of paying them. If you owe money to HMRC and you try and use this option, the likelihood is HMRC will object. But if it's just HMRC you owe, I would advise you to write them a letter, tell them, I have no cash, I have no assets, I've got no way to pay £5 or £6,000 to an insolvency practitioner, therefore I'm going to try and strike the company off, and almost invite them and say, listen, but if you want to pay for the liquidation and force me in compulsory, by all means do it. The chances are HMRC will let it get struck off. Now, you've got to be careful though. HMRC could reopen that company and actually investigate you, but for small amounts, I don't think they will. Option number 2 is a solvent liquidation. It's called a members voluntary liquidation, an MVL for short. And I think at the moment they're probably costing between £3,000 to £5,000 to do this, right? You still need an insolvency practitioner. Now this is for solvent companies where the company can pay all the debts and they want to distribute the remaining funds tax efficiently, okay? So let's say they've £100,000 in the bank and you owe £30,000 out in corporation tax and suppliers. So you're going to pay that away and you're left with 70 grand in the account. So an insolvency practitioner is going to charge you sort of £3,000 to £5,000 to do the MVL. There's some statutory advertising that needs to be done, sort of 300 to 500 quid. You might need your accountant's support as well. And the reason why people do this, the money is taxed at capital and not as income, okay? So let's say you've got more than 25 grand left in the company after you've paid everyone off, and MVL often saves people thousands of pounds in tax. But I need you to remember, right? Again, this is only for solvent businesses. If you try to use an MVL and you're insolvent, you could face lots of problems and misconduct claims, okay? Option 3, a liquidation, a creditor's voluntary liquidation. Now, they start from about 5 grand. There's talk that a basic creditor's voluntary liquidation, there should be a set fee of £10,000. That's what R3 are suggesting at the moment, okay? So it's likely that this cost is going to go up in 2026. Now, this is the most common option for insolvent companies, okay? Now, what does insolvency mean? It means you can't pay your debts when they fall due. Your liabilities are more than your assets, okay? And again, what you do is you find an insolvency practitioner, and what's included is they will prepare something called a statement of affairs. They will hold a board meeting and a shareholders meeting. They will notify all the creditors that you're going into liquidation. They'll handle any staff redundancy claims. They'll deal with Companies House. They'll deal with HMRC. And if there's any assets in the company, they will realise those assets with a hope of paying some money back to creditors, okay? They'll also do a director's conduct report on you, the director, file that into the insolvency service, and eventually they'll close the company down, probably over 12 months, and on Companies House you'll see from in liquidation to dissolved, okay? But this is the process where a lot of directors get things wrong, okay? Now, they think that the liquidation fee is the only fee a director is going to be expected to pay, okay? Now, I've done this a long time. Very rarely does a liquidation cost a director £5,000 plus VAT, right? Now, there's lots of reasons why it's going to cost you more. Now, I'm going to come on to those in a little bit later in the video, okay? Next option is administration. Administration is where you close a company down, you put it into admin, it's insolvent, and admin is seen as more of a rescue process. So you file your papers at court, you are then in administration, and the administrator is either going to try and save the business as a going concern, sell assets of the business, or sell the business in its entirety to a connected company for a pre-pack. Now, the costs of administration, I think an administration, and again, it's all about what the total cost is, but you've got agents' costs, you've got solicitors' costs, you've got evaluators' cost. So I think an agent and a solicitor is probably going to charge 15,000 quid. An evaluator's report might be a couple of £1,000. Generally, an insolvency practitioner will need an administration to cost around sort of 40 to 50,000 pound to make it viable for the administrator, okay? But again, that's not the only cost associated with an administration, which I'm going to come on to in a little bit. And then you've got option 5, a compulsory liquidation. That's where you're insolvent, you don't do anything about it, and one of your creditors comes and does a winding up petition. They basically apply to court, the court issues the winding up petition, you have a day in court. If you don't pay the money that's owed to that creditor, you are compulsory wound up. And the cost for you to do that is zero. There's no upfront fee. But I always believe the consequences of a compulsory liquidation are always a lot worse than doing it voluntarily, okay? Obviously, not to mention your bank accounts will be frozen when the petition is advertised. Instead of you using a liquidator of who you want to use, it's the official receiver who investigates your conduct. I think when you get wound up, there's a good chance that you may face some type of disqualification, because the first thing the official receiver is going to say to you is, well, listen, you were insolvent. Remember, when you're insolvent, your duties change as a director. You're no longer going to work for stakeholders and shareholders. What you're there to do is to mitigate loss to creditors, and If you've got no hope of recovery, appoint an insolvency practitioner. The fact that you've been wound up shows that you've not behaved properly as a director, and there's a good chance they'll try and disqualify you. And obviously you lose all control in a compulsory liquidation. You can't choose who you want to work with. Some directors think compulsory is cheap. You know, yeah, well, it's not going to cost me. For me, it's the most expensive when it comes to terms of stress, reputation, and problems down the line, right? Here is the bit I want you to watch. Hidden personal costs that you've never expected, right? Closing a company is not just about the liquidation fee or the cost to the administrator. You must consider what it's going to cost you personally, because these are big hidden costs. Now, I'm not suggesting that understanding these personal costs should stop you going into an insolvency process. That's not what I'm talking about. Ultimately, if insolvency is the only option, you've got to do it relatively quickly, right? What I'm saying to you is you need to be aware of what these costs are before you go into the process in an ideal world. So first one that hits people is personal guarantees. If you've signed a PG, the lender is still going to come after you once you're in insolvency. So those PGs could be with credit cards, they could be with overdrafts, they could be with loans, they could be with suppliers. Here's one that catches people out. Signing a personal guarantee on a business lease for a building, which means even if the company closes down, you're on the hook for the lease. Now, if you go into insolvency, the PG is going to write to you and say, listen, you owe us that money back, okay? And then it's going to be down to you how you restructure that money and how you deal with them. And again, I'm going to come on to that a little bit later in the video. Then we've got the big E, overdrawn director's loan accounts, okay? This is when a director owes the company money. You've got to repay it. That's what the insolvency practitioner is there to do, is to try and get the money back from the director. And this is the number one shock directors face into liquidation. I had it the other day, right? Someone's messaged us on Instagram. What's your quote for liquidation? And I say the agent, say, if anyone starts leading with that question, this is a red flag. They're not our client, okay? And they're going to cause themselves some problems. So I'm really straight up and say, listen, basic liquidation is going to cost you £5,000 plus VAT, but let's have a chat. Let's find out if there's any other problems. And the cheeky sent back to us, oh, well, you're clearly ripping people off because I've had a quote of £2,500 plus VAT. And I'm just saying, that is the type of idiot that is going to have a problem in insolvency, because no one does liquidations for £2,500 plus VAT. And I hope he don't get in. If he got back in touch, he was that rude on his message, right? If he got back in touch with me, I'd say, no, go and find somewhere else, okay? Now, directors' loans are the biggest problem. You need to understand if you have one. Where you will find that out is in your last set of accounts, okay? The problem with finding out in your last set of accounts is they are a snapshot of your business at some time in the past. And if you've took money out of that company that's not salary since that point and not paid any money into your director's loan to pay it off, that director's loan account figure in your last set of accounts has probably gone up. The best way to look at it is have a look on your management software, Xero, QuickBooks, Free Agent, Sage, whatever you use, as long as it's updated, you click on a balance sheet and the balance sheet will have debtors, money that's owed into the company. An overdrawn loan account will sit on the debtors and it'll be money that's owed into the company. It could be on the asset section. It could say director's current account or director's loans and advances, but it'll show where your director's loan account sits. If the company owes you money, it's not as much of a problem in insolvency, although you're not going to get that money back. But it's when you owe the company, it becomes a big problem, okay? Now, another issue that's coming up for people is unpaid HMRC debt. And that is if they suspect serious misconduct, they can pursue you personally. and it's called a personal liability notice. So if you are knowingly racking up huge bills to the HMRC with no hope of paying them and using an insolvency process to avoid paying HMRC, there's a good chance you could be landed with a personal liability notice. And another problem is bounce back loan misuse, right? This is a really hot topic. If you took a bounce back loan and you wasn't allowed to take one, if you took more than one bounce back loan with one company, if you inflated your turnover or the money was used personally and you go into an insolvency process, the insolvency practitioner has to flag that to the insolvency service, and it's highly likely you're going to be asked to pay it back. Now, closing the company down, right, does not magically wipe out these risks, okay? These things I've just spoke to you about are going to follow you around and bite you on the backside. So let's get into what's it going to cost to close a company. Well, depends on three things. Are you solvent or insolvent? Do you have assets in the business that will cover the cost of liquidation fees? Do you want to control the process, or do you want to be wound up in court? Now, for most struggling companies, a CVL, a voluntary liquidation, remember, it's going to start from about £5,000, and it's the cleanest, safest and most predictable option. Now, what I'm going to talk to you about now is what you should do about these problems that I discussed earlier. Personal guarantees is the first one. If you've signed a PG and you go through an insolvency process, the insolvency, they're going to write to you once you've gone into liquidation, and they're going to demand the money back. Now, in 99% of cases, you're going to be able to restructure those PGs over a longer period of time. Most of the people you've signed personal guarantees with do not want to make you bankrupt, because that's everyone's worry, isn't it? I'm going to lose my house. But the key is to be transparent and communicate with them. Let them know what's going on. And when you go through the insolvency, they'll write to you demanding the repayment, and you will be able to pay that debt over a longer period of time. Sometimes, let's say you're going through a pre-pack. So you're liquidating a business or putting it into admin and you're starting afresh. The chances are that new business cash flow will be tight for the first 6 to 12 months. So in a lot of cases, you will be able to restructure those PG loans, and pay a little bit, pay a lot less than what you're normally meant to pay, and then you step it up in month 6 or you step it up in month 9. Sometimes if it's just a case of, right, well, yeah, my PG is going to get called in, but I can keep up with the payments at the exact same level that I was paying previously, your lender will probably snap your hand off, okay? In some cases, you'll be able to offer full and final settlements, where you might owe, I know recently there was a director who owed iWalker £130,000, and they accepted a full and final settlement of £50,000. Now, there's someone I can introduce you who deals with PGs, okay? He's called Gary Whitehead. I've done a podcast with him. He's really, really good. Oh, by the way, I've not given you a call to action yet. Very sloppy of me. If you've enjoyed what I've said, or perhaps not enjoyed, if something I've said has sparked some worry and you want to speak to someone, go and click at the top of the description, click the link, put your details in, and one of my team will call you today for some free and impartial advice. Now, overdrawn loan accounts. So we touched on earlier, how do you find out if you've got one? Now, once you understand what your director's loan account stands at today, let's say it's overdrawn, the insolvency practitioner is duty bound to try and get that money off you. They're going to ask you to pay it back. Now, this is where it gets interesting. If you, as a director, have no personal means to pay it back, you've got no assets, you've got no disposable income, it's highly likely that insolvency practitioner will write it off. And they'll write it off because it's not in the creditor's interest to pursue you personally. It's not in the creditor's interest to start legal action, okay? But if you're there with a lot of equity in your property, or you've got buy-to-lets with equity in, or you have savings, you're really vulnerable, okay? Because you owe that money back to the company. And there's a chance if the company had the money, you might not be in the position that you're in now, seeking insolvency advice. So that insolvency practitioner is duty bound to try and get it back from you. My gripe has always been, Listen, I know on day one whether you've got a director's loan account within 10 minutes of seeing some information. Some firms don't mention it. And the skeptic in me is they don't mention it because they don't want to spook you. And you'll appoint them, and once you've appointed them, they're going to be round your throat for the director's loan account, which is what they're meant to do, okay? I just believe you should be properly warned about these things. Now, if you've got equity in your property, you're going to have to come to some type of agreement with an insolvency practitioner. Now, that could look like a number of things. You could pay it all back over a longer period of time. But in many cases, you're going to be able to do some type of negotiation because most insolvency practitioners don't want to make directors bankrupt. And the reason that they don't want to make directors bankrupt is because it's very, very expensive. And it's very, very risky. I mean, an insolvency practitioner could spend probably £50,000 making someone bankrupt. And to get someone out of the house might be 3 years worth of work. Well, at the end of 3 years, anything could have happened to you. Your situation could have changed dramatically. So it's very much a bird in the hand is worth two in the bush. And again, that's our speciality. Help you understand what your position is on a director's loan and give you some guidance on how to get a deal done. So to sum up, what does it cost to close a limited company? Strike off almost nothing. MVL a few thousand. Liquidation 5 to 7 grand. Compulsory liquidation isn't going to cost you a penny. But remember, closing a company isn't always about the cost to liquidate or get into admin. It's all these other costs that might hit you as a result of going through an insolvency process. And for me, it's about protecting yourself, protecting your peace of mind legally, but understanding your position before you make a decision. So if you're a UK director thinking about closing your company, contact us today. We'll help you review your numbers for free. We'll tell you exactly what the safest option is for you. And before you make a decision, we'll try and outline all the costs so you understand exactly what this is going to cost you in total. Now, if you want to know more about overdrawn loan accounts, I want you to go and watch that video there. It's going to tell you absolutely everything when it comes to overdrawn loan accounts, how you can work out what yours is, what you can do about it once you appoint an insolvency practitioner, and how you can get the best deal done on your overdrawn loan account. Go and click it there. Chris Worden, thanks for your time.